Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, let's get right into the mix here. An enormous rally after an enormous fall yesterday. This market continues to show its resiliency. The market's negating, get this, folks, the entire move down on the S&P 500 yesterday. It has been 100% negated. So again, such an interesting last few trading days going back to last Friday. Last Friday we had that ISM report, economic report, the jobs number. The markets ripped higher. The Dow closed above 14,000. Guess what happened on Monday, yesterday? Markets collapsed, negating that entire move up from Friday and then some to the downside. And again, what happens today? The market goes the opposite direction, negating that entire move down from yesterday. And right now you are trading on the SPY right at the level you closed at on Friday, as if yesterday never even happened. Now, the key here is to recognize a couple factors. I mean, first off, great rally in the markets. You got to tip your cap to the markets for getting back above the big move down yesterday. It puts us right back in the range of getting towards the 152.40-ish area, which is a major pivot little top there in the markets. The one difference here, though, that must be recognized, the volume. All right, if you compare yesterday's volume to today's volume, major difference. Yesterday we did about 150 million on the SPY. Today at just before 2:30 p.m., there's only 72 million traded. So we've done actually half of the volume in the market today that we did yesterday, and there's only about an hour and a half left in trading. So again, that's kind of an interesting little factor there. That's the only small difference I see today as opposed to yesterday. Now, what's driving the market today? Well, yesterday we had some crazy news out of Europe. Things didn't look so good. Last night, coming into this morning, Europe had no negatives. There was nothing really there. The markets liked that it wasn't a continuation over in Europe. In addition, you saw strong moves today from the likes of Google, which had dropped yesterday, Apple, which is up $16.50, BlackBerry, which continues to rally, Amazon's up $7. I mean, there's some pretty powerful moves today, and the financials are no different here. JP Morgan Chase, take a look at this. JP Morgan highs of the day, trading at $48.72. Just a tremendous move there on that stock. Looking at Goldman Sachs trading just around the highs, up $3 on the day. So really everywhere you look in the markets right now, you are seeing powerful movement, very impressive moves across the board. Okay? And again, that puts us in a position here of viewing the market. If stocks are strong today and they're resilient after yesterday, especially if we've negated the entire move from yesterday, you have to go back into the kind of the case scenario where the markets could continue to remain neutral to higher here. Now, there were actually three scenarios that you had today. You came in with a gap up. If the markets fell off that gap up and came back to the flat line from yesterday, or maybe slightly lower, you would have been negative on the markets. If the markets on the SPY, and let's go back to the SPY right here, punch that in. If the markets ended between gap fill from Friday and where they opened, so basically in here, then you'd have a neutral bias going into tomorrow. If you ended above the gap fill, meaning you negated the entire move yesterday down 100%, you have to be on the bullish side short term. That's a very impressive move. Now, I will say this, folks. I don't necessarily expect huge gains again tomorrow like today, but what I do think is that the markets may pause. The markets are getting a little tired here in terms of gyrations, so I wouldn't be surprised to see a kind of a pause day of sorts where the markets just kind of take it easy for a day or so. And then we'll see again what pattern comes out of that and how it trades following. Okay? Some stocks making moves today. Let's take a look here. Number one, OXPA. I always pay attention to small cap biotechs, and this is no different here. Big move on this OXPA today. Even though it's pulled back off the highs, at the highs it was up over 300%. Now it's up about 170% on the day. Monstrous move, folks. Absolutely tremendous move on OXPA. Makes me watch all small biotechs for possible sympathy plays. All right, Rosetta Genomics, we called out in the chat room today. That had a little bit of a pop today. We nailed it for a little bit of money. There were a couple other areas as well, but for the most part, I mean, this is where it all comes down to. The markets, again, just continuing to keep it volatile. And again, as traders, I'm a trader, obviously. I'm a swing trader, I'm a day trader. I love the volatility. I mean, the volatility is just fantastic. I actually just scalped right now the OXPA. I gave this level, excuse me, OPXA. The symbol is OPXA. I just scalped it on one of my other screens here. The reason I bought this low pivot right here at around the 310 level, if you zoom out, take a look at this. If we go to the daily chart, look at the highs going back here. This was the high pivot. So if you draw a trend line right there, it gave you a nice little base area where it was going to come into. So I actually gave my traders this level this morning as a buy level. I said, probably around 10 o'clock in the morning, I said if OXPA falls down to about the 310, 320 level, buy it. All right, I just picked it up at 315 and just sold it for 327, a quick 12 cents on it. Not a huge amount of shares, just 3,000 shares, but nonetheless, that's really not a bad gain. That's 360 bucks right there, 12-cent gain on 3,000. So you take that type of gain. On a small cap like that, you're putting barely $10,000 at risk. Yeah, you take 360 bucks every single time. It's just an easy scalp in the afternoon session. That's what it's all about, just continuing to kind of rotate. A couple stocks that to keep on watch, my favorites in the small cap realm. They're too thin for me to really be a big believer in, but one of them, the small biotech OXGN, very cheap, starting to inch up today. I'm keeping a close eye on that. And again, the reason why it gets my attention is because it's basically priced at a $7 million market cap. So it's basically priced where OPXA was to prior to the getting news today, and you can see what type of action it does. Low end of the chart. I mean, it just kind of has everything that you would kind of want in a small cap. The only negatives is it's super thin. I mean, trading 40,000 shares today is unbelievably thin for any small cap. I did pick some up. I will disclose that obviously. I do hold a little bit, just tucked a little bit away in my swing trade account. The other one that I hold a little bit in as well, which I obviously have told my day trading members in the chat room, and this is a swing trade actually, but BVSN. I just think low end of the chart stock was 55 at one point. It just seems like it's over the last year or so it's made a nice base here. And again, there's obviously risks involved, but it's trading below cash value right now. So again, I think it's somewhat on the lesser side of risk. Trading only 15,000 today. So those are my two really thin favorite ones. I have small positions in each, but nothing crazy. And I'll continue to follow them during the intraday sessions every single day since I do have some shares. All right. Both of them I'd like at least a 50% gain on before I dump them. So I mean that's what I ideally would like. Who knows if we get it, but I think they have that potential to each give forth at least 50, maybe even 100% gain in the future over the next 6 months to 12 months. Chevron today is up about 85 cents. Let's take a look at Chevron. CVX. Really not a great performance on Chevron. You could make a note here that Chevron is actually weaker than the market. You might say, well, how come Chevron's up 86 cents, but you're saying it's weaker? And the reason I say that is because yesterday, this is where Chevron dropped, obviously, and it closed here yesterday. And if you look at the previous day on Friday where it was, this is where it was, right? So the market has gotten back and negated the entire move down from yesterday, but Chevron has not. And that tells us that short-term Chevron is a little on the weaker side. So just pay attention to that short-term. All right, guys? Exxon, let's take a look at Exxon. Now, Exxon's different. See, if you take where it closed on Friday and draw a line across, Exxon's negated the entire move. So at least Exxon's matching the market right there. And this is a good way to analyze stocks to see relative strength or relative weakness. If you look at JP Morgan, I noted yesterday to members that JP Morgan Chase was only down 17 cents when the market got crushed yesterday. Well, guess what JP Morgan's doing today? Obviously, it's stronger than the market. All right, you could have seen that very clearly on the charts yesterday when it was only down 17 cents on the day. So, little things like that make a big difference. Apple again today fell sharply yesterday, but it's getting a good bounce up. I mean, this is a nice move on Apple. Actually, interestingly enough, Apple's coming into some resistance right there. Great little pivot high right there on Apple. So you actually should see, and you are seeing a little bit of a pullback in Apple right now on an intraday basis. But nonetheless, that's a beautiful little pullback. All right. Let me see what else we have here. Anything else I want to bring to your attention? So small cap wise, biotechs continue to be super, super hot. That OPXA is just an amazing mover. Even though it's pulled back as much as it has, amazing mover on an intraday basis today. Amazon, amazing move on Amazon. Amazon, interestingly enough, if you go to the daily chart on Amazon, look at what it did. So here was prior to earnings. There was where it opened after earnings. Came right back in. Perfect double bottom into the 50 yesterday, and today it's getting a bounce. So technically speaking, you could make a case that that was due for a little bit of a bounce. All right. Across the board, impressive move on the markets. I mean, any way you cut it, folks. If we jump back to the spiders here, I mean, this is a tremendous move in the markets. You can see we're literally trading exactly where we closed on Friday on the spiders. Exactly 100%. And again, that just shows you that the market continues to be resilient. Even though you could be in the process of making a top for a small pullback, by the end of this year, I still think we make new all-time highs on the market. All right, I really do believe that. Obviously, not on the Nasdaq. Nasdaq's a different case, but I'm talking more about the Dow and S&P. More so the S&P, but I think the Dow has a shot at it too later this year. All right, guys, I'm going to step aside here, get back to trading. So far, it's been a pretty solid day trading day in the intraday stock chat. Swing trading wise, we're just riding some of the profits from yesterday and looking for new entries on trades today, which we have entered one new trade. If you join the research center, you'll get that trade alert immediately. And again, it's all about just keeping it real. You know, buying, selling, shorting, going long, whatever it may be, look for the price pattern and time. PPT strategies will help you profit for life. Take care, folks. And again, come join us here at InTheMoneyStocks.com.